Welcome to another stage analysis video. It is Sunday, the 3rd of September 2023. As always, lots to get through in the weekend video for anybody and the members watching it. It goes on for about an hour and a half, but it's chunked up into 10 to 15 minute segments, so you can jump between sections using the chapters feature, which is down in the bottom right, depending on which areas you're interested in. We're going to start off with the major indexes as normal before getting into the futures charts, the industry group relative strength rankings to have a look at the forest to the trees approach, the IBD industry group bell curve, market breadth charts to determine the weight of evidence, followed by some of the stage 1 and stage 2 movers this week on volume, finishing off with the watch list stocks. So as I said, starting off with the major indexes today, S&P 500 as normal on the weekly chart, still in this potential base structure at the moment, managed to have a solid week and recover back above the rising 10-week moving average at the moment. So we've had a short-term buying climax automatic reaction. We could potentially still be forming a secondary test at the moment. So far, it's the expected behavior in the first part of a base structure, what's known as phase A. Don't always get the full phases on the index charts though. So at the moment, obviously we're still in stage 2, and we're a good few months or so now in, so back since the started to break out into stage 2 on this week here in the end of March, and fully went into it at the end of May. So we're a good 3 to 5 months into it, depending on where you're taking your entry point from there. So we're into the normal part of stage 2, and it's getting a little bit more volatile in the near term, but obviously an expected pullback compared to what we see during stage 2 advances in the S&P 500, as the pullback was a typical around 5 to 6% pullback there. We normally get between 5 to 10% pullbacks in the S&P 500. It's more in the 7 to 15% range in the Nasdaq 100, for example. In the percentage of stocks above there, 50-day, 150-day and 200-day moving averages chart at the bottom here, which is our custom chart that we do for the members each week as part of the market breadth. As you can see there, this is rallied back up to around the 47% level at the moment, and a declining 5-day moving 5-week moving average there at the moment. So still below the 10-week there. So it's potentially pulled back into the neutral position at the moment during stage 2 here. So we drop down to the daily. You can see on the daily chart we have actually had 4 days above the 180R level here. So this is the 180R plus 180R level above the 21-day moving average there. So we use this as a guidance for short-term uptrends. So when it's above the plus 180R level, it tends to be in a short-term uptrend, and when it's below the minus 180R level, it tends to be in a short-term downtrend, for example. So at the moment, change of trend in the short term potentially, could still pull back here, but showing resilience so far. 2 days of tight consolidation instead of strong pullbacks, so showing some strength in the near term there, and obviously not too heavy on the volume on Friday. We don't have markets open from Tuesday to Friday this week due to Labor Day on Monday, so a shortened trading week to go ahead. At the moment, is obviously we want to see this hold above this rising 50-day moving average, and we want the 21-day to start to move back above that. So if it does pull in, we want to see it hold that 21-day and rebound and continue on to test the highs again around that 4,600 level. Percentage of stocks above their 20-day EMA at the moment at 61%. So in a reasonably strong position, moved into a positive signal in the last week there. I think it was Monday they started to break out of the lower zone on all of the major indexes from the lower zone. Nasdaq 100, similar position to what we see in the S&P 500, with obviously a significant pullback in the near term. The first pullback that it's had since the stage 2 breakout began. So we're looking at, from a percentage perspective, it was just under 9% there. So again, as I said, in the typical range for a pullback during stage 2, we had a few weeks below the 10-week moving average, 3 weeks to be precise, before rebounding back above again. So again, near-term buying, climax, automatic reaction, potentially in the secondary test. So we draw our reaccumulation base to start here. Obviously, could turn into stage 3 down the line if we see distributional characteristics develop, but obviously they're not there yet. The pullback was on declining volume so far, and it's rebounded back above the 10-week moving average fairly quickly. So far, so good. It's just showing the characteristics of a reaccumulation base so far. So we need to keep monitoring that. If we look at actually, if I move on to I want to get the percentage of stocks above their 200-day moving average in the Nasdaq 100 is up to 70%. So we're in a strong position at the moment, still obviously more than 2/3 above their 200-day moving average as it moves into its first major base structure in stage 2. If we look at the daily chart again, 4 days above the 180R level in the near term here, and 68% above their 20-day EMA. So coming out of the lower zone strongly, getting back up towards this upper zone. So we want to see it get into the upper zone and hold up in that range in order for it to be in an uptrend again. But if it is going sideways at the moment in a base structure, if it does start to roll over in here, then that would still be normal behavior. And we want to see it ideally hold above the 21-day and 50-day moving averages in here. Same with the Nasdaq Composite, very similar position. Again, volume declined on the pullback as it was coming in. We saw a slight increase on the move back above the 10-week moving average here. So again, first significant pullback in stage 2. So base 1 of the stage 2 advance at the moment. So looking for this to continue to develop and potentially make a continuation breakout. And once again, if any distributional characteristics start to show up, then obviously that might turn it towards stage 3 type behavior. But at the moment, it's far too early to say that. 37% at the moment above their 200-day moving average. So one thing I've noted recently with the Nasdaq Composite data is that obviously the majority of the healthcare group, which is the largest group by far of the sectors, I do the market breadth on a Monday every 2 weeks of the sector breadth, and it is the largest group by far, and they are all in the Nasdaq. There's very few in the NYSE, and it's been one of the weakest groups year to date. Obviously, got the biotechs, the pharmaceuticals, the healthcare stocks, etc. So the medical stocks, it's been one of the laggard groups, and being the biggest group, because it's been lagging, it's actually kept the Nasdaq percentage of stocks above their 200-day moving average down. As we've seen, the NYSE has been much stronger, up in the 60 to 50 to 70% range, whereas we've been seeing this hovering obviously in the 30 to 50% range the whole time. So if you minused out those healthcare stocks, then this potentially would look a lot stronger. So just something to be aware of, as that's obviously a factor in that data. Something I want to do on the Stage Analysis website once I've got the SATA screener up and running fully. We've been building it for 8 months now, but it's obviously try and change up the quality of the data of that kind of stuff and get a better idea of what's in the market breadth data, so we can actually equal weight certain things and actually get a better picture of what's going on with things like this. So the percentage of stocks above their 200-day moving average, for example. So I'll keep you up to date with that as it develops. Still having some issues at the moment with the dividend data. So Nasdaq Composite on the daily chart, don't need to say much more about that really, same as the Nasdaq 100. If we look at the NYSE, it's at 57.89% at the moment, so got a rebound this week. It did make a stage 2 breakout attempt around what we got there, 7 weeks ago now, but has pulled back underneath the breakout level once more, but it did not undercut the investor method stop loss position. So technically still holding on to stage 2 and regaining that level this week. So if anyone was obviously taking it on the daily entry or the weekly entry through there, potentially from an investor method, you would still be in. Obviously a trader would have got out at much earlier as it started to break back down again. But from the investor method perspective, it is still in stage 2 here, even though it's shaken out a bit here. So looking for this to continue to develop. We want to see, as we know, stage 2 in the NYSE, we tend to see obviously the majority of the percentage of stocks above their 200-day moving average hold above that 70% level throughout the bulk of the stage 2 advance. So still in a middle position at the moment, 57.89%. So we want to see that strengthen some more in order for this to move more convincingly into stage 2. Russell 2000, on the other hand, what have I got? This is the weekly chart on that. Don't think I've got that. I wanted to see. I'm not sure the percentage of stocks underneath that. I'll find that for another video. Actually, don't worry about it on this one. Again, similar to behaviour to what we've seen in the NYSE. We had this recent stage 2 breakout attempt. We had a failed breakout attempt earlier in the year during January, which came back in. Obviously, huge significant bar, undercut the investor stop area through there. So it shook out again, came back down into stage 1 again and rebalanced, and has made a new stage 2 breakout attempt again. Has come back in, still would have held investor stop loss position. So technically, like with the NYSE, still in stage 2 here, but obviously had a bit of a shakeout in the near term. So need to see improvement in this one. Need to see it start to broaden out a bit and start to outperform versus the S&P 500 as at the moment. It's still below the Mansfield zero line here. Look at the daily chart, you can see 62% are back above their 20-day moving average. So we got a positive signal on this one this week as well, as it started to push out from the lower zone, came out from the support area and pushed back up again after retesting the 200-day moving average. Little double bottom breakout there and made it back above the 50-day. So if it does start to come back below that 50-day moving average, then that would be of concern. So we want to see it to continue to develop above these short-term moving averages here, and for the breadth to expand into the upper zone once more.